You've probably noticed that there's been a massive uptick in train derailments the past couple of weeks. On February 3rd, a Norfolk Southern operated train derailed, causing 20 freight cars carrying crude oil and various toxic chemicals to spill out and then immediately explode. One of the deadly chemicals that spilled out is a carcinogenic compound called vinyl chloride. So naturally, the residents of the town East Palestine, Ohio were all ordered to evacuate. But it might already be too late. People's pets are dying. Whole dead schools of fish are turning up. And this is just one of the recent train derailments. The Bureau of Transportation Statistics estimates that more than 1,700 such trail derailments happen every single year. Naturally, they aren't all as devastating as the Ohio derailment that we just saw, but even if they're not on the mini Chernobyl scale, they are still decimating communities all over the country. 10 days later, on February 13th, a different train derailed in Texas. And then, 3 days after the Texas derailment, another Norfolk Southern train, also carrying hazardous materials, derailed in Michigan. So why are all of these trains derailing all of a sudden? And how can we prevent future derailments from occurring? Because it turns out that all of these derailments are entirely preventable. In fact, we are this close to preventing future derailments. Most of the country's railroads are still using Civil War era braking mechanism, which does make some sense. Most of the nation's rail systems were built in the immediate aftermath of the Civil War. To paraphrase something found in the Library of Congress, most of the rails began building in earnest in 1870, and by 1910, the majority of the country's railroads were completed. The country stopped investing so much into the locomotive industry because trucks had taken over as a primary method of intercontinental transportation, which is why a lot of the rail infrastructure is still from the 19th and early 20th century. Despite the dominance of trucks, there are still a lot of goods transported by rail in the present day, which is why in 2014, following an earlier Norfolk train derailment of vinyl chloride in New Jersey, President Obama proposed new safety regulations on trains carrying petroleum and hazardous chemical products. The locomotive industry hated this proposal. After all, more regulations meant more money spent on safety improvements, which meant less corporate net income, which leads to fewer investors wanting to buy stocks in locomotive companies, which hurts the executives' share price-driven compensation packages. And so, in the interest of protecting the billionaires' executives' wealth, the nationwide locomotive companies cranked their lobbying efforts into overdrive. Obama's regulation was stripped to its bare bones, a shadow of what it could have been. The new law only regulated petroleum cargo. Hazardous compounds like vinyl chloride were exempt, despite the fact that they were what inspired this bill to be drafted in the first place. But Big Rail wasn't ready to hang up their hats just yet. Their continued lobbying culminated in 2017 when the rail industry donated more than $6 million to GOP campaigns. An investment well spent, since it led to the Trump administration further stripping down Obama's already meager regulations. One of those killed-off regulations was for freight cars carrying hazardous chemical compounds to be outfitted with modern electronic braking systems. And when I say modern, I really mean not from the 1800s. So East Palestine, Ohio, the county of which I should add voted overwhelmingly Republican, basically screwed themselves over when they elected representatives who removed the requirement for Big Rail to bring their braking technologies up into the 21st century. But the ancient, dusty, failing brakes are only one part of the story of who's to blame for all of these train derailment disasters. Do you remember the couple of weeks last December when the entire nation was panicking over the prospect of a railroad strike? When the news pundits responded by screeching on about how the rail workers who run the majority of our country's supply chain striking for better wages and working conditions while their executives were making fistfuls of monies were being totally unreasonable? Do you remember that? Because you might also remember that one of those working conditions that the strikers were asking for was more time allocated to inspecting the freight cars before they get sent off. The safety inspections are supposed to take 3 minutes per car. Instead, the workers were only given 90 seconds per car. So what's with the rush then? Why did the rail workers suddenly find themselves allocated with only half of the amount of time needed to inspect the freights? It's because of a simple calculus that the high-ups at Norfolk and other big rail companies made. The executives at Norfolk realized that they could make even more money if they made the trains carry more cargo and increase the frequency of train departures. More cargo on more trains means more profits. This is something that the Norfolk executives openly brag about. The image on the screen right now is the transcript of an earnings call with the company's investors in 2020, where Norfolk's COO talks about how their genius idea of increasing shipping loads means more money for the investors. She later brags about how the company is operating these increased load requirements with even fewer workers than normal in order to reduce the operating expenses by 8%. and thus raise corporate profits for the investors. If you pay attention to the investor call, you'll see that the company's entire focus is on speed. They look at yards to see how they can speed up cars. Their real mission is around keeping cars moving. Moving our cars faster is really our primary focus right now. It's all about speed, speed, speed. Idle cars don't generate profit. Less profit means lower stock prices. Lower stock prices means executives have a slightly worse compensation package. Unfortunately, even if Norfolk Southern was somehow able to start operating all of the trains in the world, it wouldn't change the fact that there are only 24 hours in a day. The rail workers were required to inspect more freight cars in fewer amounts of time, which is how all of these train derailments happen. The rail workers literally do not have the time to properly ensure that the trains transporting hazardous materials across the country are safe to operate with their Civil War era brakes. And the rail workers knew this, which is why they went on strike late last year. But the mainstream news media kept whining about how the strike absolutely must immediately be crushed, and Joe Biden ultimately caved, forcing the strikers to return to work without implementing the safety measures that they were campaigning for. As much as I want to slam the POTUS for this decision, I do sort of empathize with his position, but only a little. A strike grinding the nation's rail lines to a halt would absolutely devastate the entire economy, leading to mass layoffs and pandemonium. This would decimate the stock market and drag Biden's approval ratings down with it. And we all know how important these little percentage points of approval are to career politicians like Joseph R. Biden. It does raise a new question though. If the rail workers really are so vital that them not working for a short while will annihilate the most powerful economy on the planet, then shouldn't that just be all the more reason for them to be given what they're worth? The strikers weren't asking for anything crazy, just proper working conditions and an increased wage in a time of high cost of living. It isn't even like there was any money to spare. These rail companies make a ton of money every year. Norfolk Southern clocked in a net income of more than $3 billion in the fiscal year of 2022. Yet despite getting $2 billion to pay its Wall Street shareholders, Norfolk executives chose to not slightly raise their operating costs by letting its workers properly inspect the freights for safety issues. Norfolk executives chose to not replace the 150-year-old brakes on its cars. And because of this, Ohio, Michigan, and Texas all just got nuked. And many of its residents are facing terrible health complications that will only reveal themselves later in time. So who is to blame for all of these disastrous events? The answer is pretty plain. The culprit is shareholder capitalism. The obsessive need that corporate executives have for stock prices to be as high as possible led to intense lobbying to remove safety regulations that would impact the bottom line. It led to rail companies not updating 150-year-old safety mechanisms. It led to Norfolk Southern deeming it necessary to maximize throughput, cutting the safety inspection time in half. It led to Norfolk Southern not willing to compromise with its workers when they raised concerns about the disasters that the breakneck schedules would lead to. And it led to Joe Biden crushing a rail strike just to preserve the S&P, NASDAQ, and Dow Jones. All of these train derailments are just so the NSC ticker symbol on the New York Stock Exchange can display a slightly higher number than it was last year, just so the executives at Norfolk Southern can cash in on a slightly higher compensation package. Remember to like this video and subscribe for more videos on corporate greed.